We need to stop romanticizing tech because it is quite clear that the tech job bubble is bursting. In case you haven't heard, the biggest tech companies, including companies like Meta, Amazon, etc., have seen around $2.1 trillion wiped off their value in just the past few months, and quite frankly it seems like it's going to take them a while to recover because this tech market volatility is something else. And what is particularly sad is that there are so many people who've been going through months of interview prep, attending offsites, studying late into the night just to get close to an offer and then be told, really sorry, our company has frozen hiring. I mean, how devastating is that? And I imagine that it's just soul crushing. And I've seen a number of really sad posts from people on LinkedIn and various forums about their offers being rescinded, and in some really like awful cases, sometimes their offers were tied to their working visa authorization, which is just not ideal. I really wanted to talk about this and kind of discuss some of the leading companies that are caught in the crossfire so that you can avoid them, at least for now. And it's also important to understand why the slowdown is happening so that you can be prepared, whether you work in a tech industry or not. And then importantly, I also just wanted to talk about the types of tech companies that you should be applying to right now, because despite this upheaval, there are some stable companies out there with solid cash flows and really good growth prospects. And look, tech is here to stay. These companies are still hiring, and if you want to build a future-proof, long-term career in the tech industry, these are the types of companies that you should be going after. So stay tuned to the end of this video where I'm going to talk about that. But for now, I just wanted to kick off with, why is this happening? Simply put, we are in the middle of an economic slowdown. We are in a bear market, and interest rates and all of the fluctuations and anticipated recession has caused a lot of investors to be like, this is manic, and they've just dumped their tech stocks in favor of safer options like bonds and things like that. I mean, my portfolio is pretty diversified, and I'm still trying to avoid looking at my bank balance because I'm just like, what is happening to my investment accounts? Meta, for example, recruited more employees during the first quarter of this year than in the whole of last year. And now they've changed their tune and they're saying things like, oh, we need to take a look at our priorities and make some tough decisions that will affect almost every team in the company, which translates into hiring freezes at best. And if you're very cautious and critical, you can anticipate that layoffs might be coming at worst. So which companies have been doing these hiring freezes and that you should avoid? You guessed it. Meta is the first one that comes to mind, and that's for a number of reasons. So for example, changes in data privacy, reduction in ad spending. There are people who would argue that Meta was in trouble even before this recession, especially when you think about how much Zuckerberg has spent on this metaverse and how their Reality Labs arm lost over $10 billion last year. Another company that's struggling is Salesforce. They have gone from hiring over 20,000 employees, having really like lavish staff parties, to announcing cost-cutting measures. And they are also another company, in my opinion, that can't blame their woes solely on the recession, because their stock price has shrunk by over 50% in the past 6 months. And this is partly due to their acquisition over growth strategy, which hasn't always paid off for them. M&A is my bag, right? So my background is like finance and, you know, company acquisitions, aircraft financing, lots of stuff like that. And I found it interesting that Salesforce purchased Slack for over $27 billion, and this had a really big impact on their profitability compared to some of their other peers. So for example, Microsoft's cash flow to revenue ratio was apparently 33% last year, compared to Salesforce, which was under 20%. So I think with some of these companies, you have to kind of look at them with a side eye, because you really can't blame everything on the recession. Perfect example of that is Twitter. They have been having sluggish growth and like limited subscriber growth for the past few years, and then you add this Elon Musk drama into the mix, and this has plunged the company into uncertainty, and they recently announced that they're making another hiring freeze. Their spokesperson said something like, effective this week, we are pausing most hiring and backfills except for business critical roles. And the reason why I point this out is that a number of the layoffs and hiring freezes that I've been seeing are more in the like technical space. So you can kind of argue that if you're looking for a non-technical role, maybe you're not going to be affected so much. But hey, just take this with a pinch of salt. That's just my opinion. Another company that seems to be struggling, that lots of creatives really want to work with, but for some reason I think people haven't really cottoned on, is that Netflix is in trouble. Their content boom has slowed down and they have issues with subscriber growth, causing them to rethink how much they're spending. So according to the Financial Times, they said that they're going to be cutting back for the next 2 years, and they've already laid off around 150 employees. This is quite a sad state of affairs, but before I talk about the companies that seem to be stable, I just wanted to make it clear that there is no recession-proof company. So if you're looking to make a career change or you want to land a new job in this market, you need to make sure that you are tightening your economic braces and that you have an emergency fund and that you're making any changes that you're doing in a well-researched way and with your eyes wide open. I talk about the importance of an emergency fund in one of the videos that I'm going to link to this one, and I've also included a free career change checklist below this video if it's helpful, because I cannot reiterate enough how much you need to do your research and have an emergency fund in this market. So all of those warnings aside, there are still some companies that are doing fantastically well right now, and the market perception is that they are more stable than some of their big tech counterparts. I'm talking companies like Amazon. Regardless of how you feel about Bezos, they are a highly diversified business across the B2B and B2C space, and people seem to be buying stuff even when we are challenged. Like, look at how much people were spending on Amazon during the pandemic. And then we also have Microsoft, where their CEO has just announced pay increases instead of layoffs to help employees deal with rising inflation. That's where you want to be, because inflation is above 8% right now. Then we also have Google, which has also announced similar changes to their performance review system that essentially will bring higher compensation to workers. And there's other fantastic companies like Block that just offered my clients one of the most competitive benefits package I have ever seen. I really want to encourage you that if you are going into tech, step away from all of the hype on YouTube and everything and just go in with your eyes wide open. Tech jobs are here to stay, but be prepared. Ignore the hype and plan your career strategically, because this is a massive time of change. Time of flex means the same thing. But there are still so many opportunities, and I don't think that you should give up on your goals just because the market is a little bit turbulent right now. Some of the most successful companies were founded during the last recession. I got my leg up into the job that changed my life just after the last recession. So I really want to encourage you that be very perceptive, but also very strategic, and don't just relax because you're sat working in a good company and you have a good job right now, because it's not just tech that's struggling. But I hope this video hasn't been too scary. I hope you've enjoyed it. I hope it's giving you some food for thought. If so, comment below. What do you think about the tech industry? Do you think that they needed to have this adjustment? Because some people argue that some of these tech stocks were overpriced in the first place. That one is way beyond the scope of this conversation, but it would be really good to kind of get your thoughts on what's happening in the market right now below. And I'll see you in the next video. Bye bye.